Mitt Romney wins big in the New Hampshire primary with almost 40% of the vote. But U.S. futures head lower as caution rules the day. Tech giant Microsoft warns of weak fourth quarter PC sales, and ratings agency Fitch says the European Central Bank needs to do more to help Italy and prevent a, quote, cataclysmic euro collapse. I'm Alix Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alix Steele with The Street, and together we bring you Morning Call. Happy Wednesday, everybody. All right, Scott, so we're looking at stocks here. S&P opening right below that 1292 level. We were talking before we got on camera about all the headlines, the litany of headlines here, right? We have a warning from Microsoft about PC sales. We have Hungary still have a lot of debt issues here. Fitch warning the ECB needs to step up and prevent like a cataclysmic attack. Is it really just, say, a technical level here? We're just bouncing off a level and then selling off?
I think it's a little bit of both. We've had a big move in the markets, a nice methodical move to the upside. You know, this morning maybe a bit more negative headlines versus positive headlines. So, you know, we're trading off, but this is the way the market's been trading since we started the year. You know, we gapped up on the first day of the year. It took about 4 or 5 sessions to regroup before going higher. But within that regrouping, we've seen a lot of stocks show relative strength. We've seen a lot of groups lead to the upside, as well as some lower level groups just methodically moving higher. So overall, I think the action this year has been very constructive.
I was going to say, because isn't it a positive perhaps that we can get some people in here to the market to kind of buy this dip? And we were coming up on Chinese inflation data for tomorrow, the ECB meeting tomorrow, as well as auctions from Italy and Spain, highly watched. So let's look at the charts and see what that level might be that you might want to get long.
Okay, so here's the spiders first, just to show you yesterday's gap. So here you go. You know, ever since the October low, you've had a nice methodical move. Everyone complained how big this one was and how fast this one was, you know, rightly so, because it was hard to buy. But since then, you've had a nice level or a nice constructive pattern. Here's your October low, your November low, your December low. We broke above this downtrend. Then look, this was the first day of the year. And granted, everyone complained there was no follow through that day. But within the next 4 to 5 sessions, there was a lot of action. So yesterday, same type of scenario. We gapped up right to that old October high. So we need to see what happens the next few days. Yesterday's low was what, 128.95. We could come in and we could fill a portion of this gap, but I'd like to see us hold higher. You know, if all of a sudden this last uptrend gets broken, you know, to the downside, maybe we have a bit more of a pull-in to deal with if some of these headlines start to get worse. But overall, a really nice move. And as far as some of the groups, you know, the groups are acting well. I want to show you a quick chart of the refiners, the OAH.
And as you're pulling up the chart, I want to ask you, would you be buying on this dip or shorting on the way down? What's the best strategy today?
I have not really shorted any indices yet. I've been shorting some individual names, some names that were extended that showed weakness in the beginning of the year. I've been trying to be long the spiders, I've been long the OAHs, and I've been trading a lot of different names based on their chart patterns. And that's the type of complexion or the type of strategies that active traders have been having success with.
So let's go to the OIH and see how you sort of buy on the way down then.
Well, if you recall, going into the end of the year, we talked about this inverse head and shoulders pattern. So here you go. This was your left shoulder. This was your head. This was the right shoulder. I think Kramer had it on Mad Money right around here, saying you could accumulate in this area, and then you can get to a tier 2 when it breaks above this ascending channel. And now it gapped above, so I never went to tier 2. I'm still holding tier 1, but I think as long as it stays above this like 119 area, you're going to see a nice methodical move to the upside. So for a macro holder, I would stay with it. And if you're looking to stock pick, a lot of stocks within that group are outperforming and they're showing you alpha. But the real play has been in the home builders and the banks. There's been power there besides some select tech stocks.
And those are the 2 sectors we're going to go over today on the morning call. So let's start off with banks. JP Morgan reporting Friday the XLF has been very strong into the print. Expectations for this group are pretty low. We all know the capital markets are weak. So I wonder, how does that play into the strategy? Is the bad news baked in, or do you need to sell into this rally ahead of the print?
Well, JP Morgan's been the one that I've been focused on since I think the last day of the year. I went long JP Morgan, saying that chart pattern looked best. First, let's take a quick look at the XLF. If you look here, you will see a nice pattern, same type of scenario. Here's your low, a higher low, the dip was bought, a higher low, the dip was bought. Then you had a little bit of a breakout, and it actually held up a little bit better. You saw the spiders actually had a red bar on the close, and the XLF did not. So same scenario here. You know, can we hold a portion of this gap on this gap up? We've filled it. So we'll see. JP Morgan, I've been holding it. I've been trading around it. I do think as you head into this bigger resistance around 37 or so into earnings, I might be flat into JP Morgan depending on how it goes, just because I've been long since this area, and for me, that's a nice trade for macro holders of JP Morgan. I think you sit tight and you'll be fine. You'll be higher prices this year.
And it's really difficult to gauge because analysts are expecting JP Morgan to make 93 cents a share on revenue of almost $23.5 billion, but that's down quarter on quarter and year over year, but those are still solid numbers. So I think it's really confusing. We actually have a great preview on the street about what to expect from the JP Morgan earnings, and the two highlights for me that I saw was how much of their loan loss reserve will they release.
Right.
So how much more money will they let go? How confident are they in the consumer and their delinquency rate? It seems to be stabilizing, not improving, which I wonder sort of going to be a wash there. And also they have a ton of cash. Are you looking at dividends? Are you looking at buybacks? Are you looking at buying cheap European assets on sale overseas? So it's, what are they going to do? And I wonder what the stock is pricing in your opinion.
Well, at this point, it's not on the lows, so it just had a nice move. So I think it's pricing in a little bit more than just, a trough. They're pricing, I think, a little bit more of a quality earnings. They just don't want to see them raise whatever they marked their debt assets down to. They want to see a little bit of top line movement. So I think this earnings report is going to have to be a bit better. If they miss with where the stock is just rallied to, it's probably going to get, it's probably going to get hit. And if they do come in a bet, just say ahead, I don't think there's that much more on the short-term move that you can get out of JP Morgan.
Would you be trading Goldman Sachs off of this? I mean, is this a really dumb, go long JP Morgan, short Goldman Sachs? Is there a way to use Goldman Sachs?
I use it as a vehicle to trade, and Goldman Sachs has been downgraded in the past week or so. I've been trying to play it for a long trade. It actually woke up a little bit yesterday. So as a trading vehicle, it was better than a hold, which you saw with JP Morgan. So Goldman Sachs yesterday, nice trade. If you look, we talked about it off the charts. This was the recent bottom area. It perked up, went sideways. Within going sideways, this is where I started to accumulate a little bit. It broke above this 96.5, almost hit 100 yesterday. I like to see the same type of pattern here. I like to see it hold this gap, go sideways, and then if it were to go above yesterday's high of about 99 and change, maybe it could hit this 105 and then also up to this 115. And right now, JP Morgan is almost equivalent to this area, and Goldman Sachs is lagging. So we got to make sure either it's going to play catch up or it's telling us something about the earnings of Goldman Sachs coming up.
And then what about Bank of America? Has had a huge move, but was just like slaughtered in 2011. So reporting earnings next Thursday, expecting earnings to come in about 20 cents a share on revenue, just under 24 billion. Of course, bad mortgages are still the overhang, but if we continue to hear some kind of chatter about the government selling bulk mortgages or foreclosed houses to investors, that could be a really good sign for Bank of America. What do you think about this stock?
I think it's been great for a market timer. Last year, it gave you a lot of signals to get out of the way, to use stops, to get out, just to sell, or at least limit your risk. And this year, it's been acting very well. If you look at the chart of Bank of America, if you bought it at the beginning of this year, you saw a nice percentage. And if you look here at the chart, you will see this was the first move that potentially you missed. And then really the breakout to buy, technically, was above this 589. And if you did so, you almost had $1. So that's a nice percentage gain. But if you look, it's coming into some resistance. You have bigger resistance up there. If you're long this stock, what I've told some people actually at this point, I would sell some of the the June and July 7.5 calls. I think you can get a nice premium. So this way you have room to 750, and if it pulls back, you have a little protection from the premium that you just sold in the money calls if you don't want to sell for a profit yet.
All right, great strategy. We're going to be right back talking about the home builders as well and how to trade them. So stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, let's get in the trenches here. Going with home builders. You were highlighted on Mad Money yesterday talking about the home building chart with Jim Cramer. Let's go to the HGX before we get to individual names. Tell me your macro thesis.
What's interesting is I really didn't trade any of these home builders this year because they've been so battered and bruised, and I'm so used to not looking at them. I did ride other vehicles, but when I looked at the home builders, I'm like, wow, this was more than just an oversold bounce. This was more than a dead cat bounce. This bounce had power. What is this telling us? Is it telling us that there's going to be a housing recovery in the next 6, 9, 12, 18 months? And if so, the economy gets better, and if that happens, the stock market should hit a lot higher levels. And I think for short term, I talked about first quarter, we could see 1320, 1340, but if we get a sustained housing recovery, I think 1410 to 1440 is in the cards this year. and then maybe even, what did Dougie Fresh say? New all-time highs, but I think that's more for like a 2014.
So do you think that the home builders are already pricing in strength 6-8 months down the road, or do you think that they're sort of just trading at levels right now that they should be?
I think that they're pricing in some kind of recovery. They're indicating that we're going to have a recovery. The good news is that's going to be great for the economy. The bad news is if you missed it, it already happened. So we need to look at the charts. You can't chase the excitement, but realize where you could potentially buy the dip and see what's important. So if we take a look at the chart of the XGH, you will see that the move had power.
Let's do it. Let's look at it.
There you go. All right. No more talking for me. Here's our low in October. Here's a November low. Here's a December low. And look at this stretch. Nice stretch above the resistance, above all these moving averages, which to me always says strength. So at this particular point, big move. Okay, if you go to the weekly chart, you will see it's coming right into some big resistance. So I never like to buy into some big resistance like this because it's hard. There's so much supply here, so many old can I say pissed off?
You just did.
I just did. People that have held for this down move. So at this point, I'd like to see it come in a little bit, go sideways, and if it could hold, right around this 102 or this 100 level, I think that'll be viable. And then we then at some point take out this resistance, and that'll be very good for the markets.
Scott, I did a lot of work on sort of the housing market a few weeks ago, and here's some stuff that I have to share with you. So non-residential construction spending, so that's spending on, say, healthcare facilities, schools, rental apartments, was up 17% year on year in the third quarter. We also saw that accounted for about 1.2% of growth in the quarter. That was half of GDP in the third quarter. I was reading a note that said if it continues in double-digit growth, we're looking at an extra percentage point on GDP in 2012. That is enormous. That is a big, big deal. Non-residential construction doesn't do anything for the home builders, but it does create jobs.
Right.
And that does trickle down to people now having more money. We did see 17,000 construction jobs added in December, and then they wind up having more cash, and they can go spend. And if we look at the individual names, you got to look at the backlogs, right? I mean, we saw Lennar reporting this morning before the bell. Their new orders were up 13%. Backlog was up 6%. They beat on revenue. Earnings were a little light. I mean, those are very good signs. And some of the charts seem to show that. I wonder if Lennar is one of them.
Well, all those stats that you just said could have been the reason behind the strong technical move in a lot of these stocks. Now, if we go to, I guess, Lennar first, because it just reported, you take a look here, it had a nice move. Okay, so this is the daily chart. Actually, this is the weekly chart. Look at this move from 13 as high as 20, almost, up 70, 80%. But look where it's come into. It's come into some big resistance on this weekly chart. So if you even go to the daily chart, you'll see that, it just, look at that trending chart. Yesterday, a little bit of a topping tail, it pushed through and failed. I think it's off about 1% right now. I would say give this some time. You do have an uptrend intact. We'll see if it could hold it. It'd be nice if it could at least hold this area. If it doesn't, I still think that it can come into the 50-day and be strong, and look where this would be compared to the low. So that's why I'm saying we can't chase it here, but we could buy it back into this area. And if it holds there and goes, that's going to be continued strength for the group and for the overall economy.
And same deal with, say, D.H. Horton and Toll Brothers, because they're near 52-week highs as well. And for Toll Brothers, orders were up about 15% in the third quarter. Backlog was up 12%. D.H. Horton has unit backlogs at 18%. These are all very consistent numbers, but 52-week highs, so no need to chase.
Right. Like if you're in there, you're getting rewarded. Stay the course. If you're in there and you don't want to sell, maybe sell some calls, like I said, with some of the banks. If you look at the chart here at Toll Brothers, this has been unbelievable. I can't believe I haven't been trading this thing. From the low here of 14 to as high as almost 22, a very methodical move above the moving averages. But the problem here is on the weekly. The weekly, you're right back into some major resistance. So it's hard to buy after a big move into this resistance. So again, if this could, pull in just a bit and hold some of these higher levels, maybe 2050, it could even pull down to perhaps 1920. You go like this into here, and then from there, let's get that nice line, pow, and that'll be great. And
then when you look at, say, a KB Home, though, which is not near 52-week highs, is this an interesting play instead?
Well, it depends. Let me take a look, because some of these laggards have been doing really well this year. Like we saw that in a lot of tech stocks. So if you look here at KBH, you will see on the daily that, let's see, it's in a tight pattern, right? Take a look here, nice little channel coming up to the top end of the range. It's one of the cheaper ones. It just had a move from 6 to almost 770. That's a big percentage move. But on the weekly chart, this looks interesting because look where this, obviously it's a lagging, it's below the moving averages, but above $8 at some point this year, you could be able to, you could see 10 to 12. That's a nice move. So I would watch this one as well.
And then very, very quickly, what about some derivative plays? If we look at like a Lennox International, LII, or like a Home Depot or a Lowe's, where you need the stuff. You need the stuff. I mean, Lennox produces, heating, ventilation, air conditioning, refrigeration, that kind of stuff.
Okay, well, this stock also, I think, had a good move, and I know that Jim was talking about the stuff and the guts. And if you look here, this chart looks good. On the daily, it just looks like it's breaking out. You had a nice consolidation here, closing the dead highs yesterday. So it does have some room to like 42 or so if you want to be there. As far as like a Home Depot, that was my stock of last year, and it's been doing great. It was my number one play of 2010, and look what it's been doing. It's slowly going up. On the weekly chart, it also, it's just, wow. This is unbelievable. Look at this move that it's had on the weekly
chart. You can't chase it, right? I mean,
at this point, it's hard. It's way too extended. Just figure out why you missed it. I guess let's go one more stage. Let's go to the monthly chart. And again, cleared all this resistance. This stock looks really good.
All right, let's see if we can do 5 stocks in 1 minute. Let's see if we can do that.
All
right, let's go to Apple first. Is it getting too toppy? You're going to have to sort of buy the rumor, sell the news into earnings next week?
Apple had a big move, went to the 52-week highs. I think it's going to rest. It's going to be in a range between 415 and 427. I would just let it rest until earnings.
What about Crocs? Raised fourth quarter guidance yesterday. Good trade today?
I think Crocs got crushed a few quarters ago. Nice lower range here. It's up 80, 90 cents. If it could hold that gap in the first 60 minutes, I think you might see some follow through to the upside.
And got to go to Baidu, up strong, almost 6% on Tuesday. Do you want to get caught in the stock, though, if we see a market downturn? Is it time to sell?
It's been lagging this overall tech move, but yesterday it woke up with some volume. It cleared an area. I think if it gets above yesterday's high, you add to it for some momentum.
And Think Equity actually had a good note out about it this morning. And Potash, up almost 4.5% yesterday. What you doing?
Look at POT, tight little pattern. I like it. I just want to show you real quickly. Go to the daily chart. You'll see above 44, and this can continue higher.
And last up, Open Table. What I saw closed down in an up day yesterday.
Right. You never like that. But this is one of those stocks that's very heavily shorted. We've done really well with a lot of these big stocks with short interest on the lower levels. If this stock that was been battered and bruised starts to get above 45, it could get to about 50 before it sees some, fresh resistance. So keep that on the radar.
I think we did it. I think that was a minute and a half for all those stocks. So, all right, wrapping it up, I want to touch on gold very quickly. Broke above that 200-day moving average yesterday. Closed like 50 cents below it. As a trader, would you be getting interested now? Is there momentum into gold? It's it was up about 12%, $12 today. It's coming off now as the euro sinks.
I was a bit more interested last week when I saw the divergence when gold wouldn't go lower and the euro was going lower. So that was a nice trade to see the divergence for along now. Right around the 200-day, it's had its bounce. The question is, can it be sustained? It's not as compelling of a trade. I wouldn't be just shorting it here because there is some more room, but to be buying it, you missed the easy part of the bounce, in my opinion.
All right, fair enough. That is it for us for Wednesday. Happy trading, everybody. I'm Alix Steele from The Street.
And I'm Scott Redler, so make sure if you want to follow us on the virtual trade floor, just log in, take a look. We'll be talking about what we're seeing all day long, and 1,000 eyeballs are better than 2.